Welcome to the May 21st, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. On the left-hand side, we have a daily chart with the 10 and 20-day EMAs, 50 and 200 SMAs. This is our standard moving averages. We may also use the 65 and 100-day EMAs as well, but this is our base setup right here. This is the RS line, the relative strength line, which divides the price of the ticker versus the S&P 500, and then it is plotted here on a line. Gives us an idea of how the stock is trading versus the S&P, and we like to see the RS line move in step with the price to confirm or ahead of the price. But when this line lags the price action, that means that the chart is lagging the S&P 500. And as you can see right here, this line has already made new lows while the Nasdaq is sideways, which just means that the Nasdaq has lagged the S&P 500 since the pullback in March. On the right-hand side, we just have our weekly chart with the 10, 20, 30, and 40-week moving averages. The most important moving average we follow on the weekly is the 10, and this is like the 50-day MA, just a little bit quicker, and we'll often use this average for pullback entries. And we have volume on both charts. On the daily, it's over 50 days here, the average, and on the weekly, it's over 10 weeks. So that's our basic setup. As usual, we're going to run through a few broad market averages, then we'll take a look and see what's out there in terms of setups. Currently, our market timing model is sitting on a sell signal for both the S&P 500 and Nasdaq Composite. The S&P triggered a sell signal on a break of the 20-day EMA on 5/11 and confirmed that signal with the action on 5/12, breaking through the prior day's low. So it's still on a sell signal and will remain so until it can get back above the 20-day EMA and hold above that average for 2 to 3 sessions. But looking at the weekly chart of the S&P 500, after last week's wide range candle with hanging man-like action with this long wick, which suggests that the uptrend is losing some steam, we wouldn't be surprised if the S&P were to digest the recent advance and chop around for a few weeks. Having said that, we have no crystal ball here. The price could reclaim the 20-day EMA and hold for a few days and then break out to new highs next week. We're not here to predict price action. We just want to react to it. The Nasdaq had a constructive day on Thursday, solid advance of 1.8%. Finally closed above the 10-day EMA, which had failed to do so over the past 3 attempts. Closed at the 20-day EMA and is still below the 50-day MA. So it's run into quite a bit of resistance around 13,600. Also has some prior swing highs to deal with in that area. But it was constructive price action. And the only thing missing here was volume, as volume was lighter than the prior session. So what we'd like to see unfold out of the Nasdaq next week is, for one, the price action to reclaim the 50 and stay above the 20-day EMA and allow the 20-day EMA to begin to curl up along with the 10-day EMA. If it can do so, then we might look to add some long exposure, even if there isn't a fall-through day. But once there is a fall-through day in place, you can certainly put money to work if setups are there. And in terms of what's out there in buy setups, Roblox looks pretty darn good here after a failed IPO breakout attempt. In April, price action pulled back and then undercut the prior low. So double bottom-esque here. Rallied back through that downtrend line and has pulled back to test it. But it's basically holding above the 10 and 20-day moving averages in this 70 to 77 area. If it can break through 78 on volume, that would be a positive. and even more so if it can do this with the Nasdaq producing a fall through day. UPST is another stock we're watching. A pretty sharp move off the lows here, already up 70% or so. So this is quite a mover, and what we look for from here is the price to relax for a few weeks and chop around in a tight range. This is a little bit too much, too fast off the lows. Price would be up almost close to 100% if it were to touch the prior high. So it's certainly a strong stock, but one we'd like to see settle down and tighten up for us to get involved. PATH is a recent IPO. Broke the downtrend line on Wednesday, but closed off the highs of the session. The next day opened above the downtrend line. Also closed off the highs of the session, but it did close above the downtrend line, so that's a positive sign, as it also has to work through resistance in the 77 area. So if the price were to chop around for a few days here, maybe pull back in to allow the 10 EMA to curl up, that could be something that would be of interest to us. Hubs looking pretty good as well. Just broke the downtrend line. Volume still pretty light though. And this is a 20% pullback off the highs. So we're not looking for the price action to rocket to new highs. And if it did, that wouldn't be the type of entry we'd want. If it were to run up here, we'd want it to chop around for a few weeks. So what we're looking for is the price to run up for a few days, possibly stall around 530 to 540, and then pull back in, and then form a handle above the 512 to 520 area. Crowd reclaimed the 50-day MA. It's still below this downtrend line, but could be in play with the stop beneath the 2-day low, which is 7% away. It's a little bit wide. Might be better to go with the stop beneath the rising 10 MA, a little under 5% away. APP, also a recent IPO. And this is too quick of a move off the lows here as it's approaching the prior swing high, but another one we want to watch and allow the price action to chop around for a week or two, see what happens from there. And energy, for the time being, failed a breakout attempt for the second time, really, above the base high. And it just may be a case of too many eyes on the energy sector, which has shown a ton of relative strength. May just be that XLE needs to chop around here for a few more weeks and then attempt to break out down the road. Same goes for XOP. It's just having one heck of a time being able to extend past the 86, 87 area. And for the time being, it looks like the money is flowing out of steel. We'll have to see how CLF responds off the 50 MA. Certainly didn't want anything to do with the 21-22 area. And so it looks though in the short term we've had money flow out of commodities and into tech stocks. And we'll see if that trend continues. That would be great if so. That's a wrap for tonight's video. Thanks for joining me, and we'll see you again next week. Have a great weekend.